Hello, my name is Abraham Agulan. I'm the Principal Financial Advisor at INFUSION360, and I want to welcome you to our Investment Committee Market Update. Firstly, I just want to take a moment to recognize those that have been affected by this crisis, both from a health perspective as well as an economic perspective. And we wanted to say thanks to the frontline workers, doctors, nurses, aged care and healthcare workers that are helping to treat our community. I know a lot of you are our clients, and so I wanted to just take the time to acknowledge that and also say thanks for taking the time to listen to our market update. Just wanted to obviously make sure that this presentation does not take into account your personal needs, position, and objectives. And I strongly recommend that you seek advice from a qualified professional before making any investment decisions. Well, it's the 21st of April, and life has significantly changed over the last couple of months. We've seen countless people losing their jobs, industries in lockdown, share markets in free fall, schools and daycare centers being closed, and you've got mum and dads, trying to juggle life and work from home. And we've also got a health crisis that's out of control, particularly in certain countries overseas. February and March saw heavy selling across equity markets as it's priced in the risks of the coronavirus outbreak. We've seen significant disruption to supply chains due to the lockdowns, the travel restrictions, and a different approach being applied by each country on how they contain the virus. In Australia, to the end of March, we've seen a fall of 29% from its peak from the 20th of February, and is slowly starting to recover in the first couple of weeks of April. With the S&P 500, which is the US stock market, we've seen that down around 27% in March. But as a result of this correction, we're seeing really good quality names that have been sold off, and investments in specific sectors and resilient businesses now showing very attractive long-term valuations. What are the issues that we're seeing or that have been highlighted as a result of COVID-19? Well, we're seeing economic stimulus being applied across developed countries with billions of dollars being pumped into our economy, even here in Australia. And this is to try and maintain a certain standard of living, despite many Australians still facing a very challenging time. Essentially, we see that the response of governments around the world, how they respond will be with fiscal policies and containing the virus as being key to the recovery post-COVID-19. In terms of a recovery, we see it going in one of three ways. Either a V-shaped recovery, which will be underpinned through the quick response of governments, where we'll see a sharp rebound in share markets, back to levels that were pre-COVID-19. But as we know, there are going to be certain sectors and industries which won't be faring as well through this situation. The next is a U-shaped recovery, where the response of developed nations to underwrite some of the output gap by the affected industries to help contribute to global GDP, which will mean that it will take a longer period of time for markets to recover, but post-COVID-19, we should return to some sort of normality. Or we could see an L-shaped recovery, where we will be in a deep recession with a prolonged bear market, where efforts to stimulate economies and contain the virus haven't been as successful. We think that the situation right now remains very fluid, and it's very difficult to predict how the next 2 to 12 months will play out. All we can do now is maintain our portfolios in line with our investment philosophy. In terms of the investment opportunities that we see, well, historically, there's always been a strong rebound following a mass sell down or panic selling. Although this time around, what we're seeing is a health crisis, which will eventually lead to a global financial crisis. There will be certain sectors and industries, as mentioned, which will take longer. But the key to a successful recovery, like I said, lies in the success of governments and the fiscal policies that they will be able to produce, as well as the ability to contain the outbreak. With that said, at some point in time, the levels of debt that the governments will need to absorb through this stimulus in their economic systems is eventually going to need to be repaid at some point in the future. Therefore, we think that countries that require a lesser amount of stimulus to achieve stability will be able to emerge stronger through this period. And in this scenario, we're seeing corporates cutting costs. We're also seeing a slower recovery in employment, business, travel, retail sectors, and office demand may not be fully recovered in the short term. The future of house prices will also be key to our economy. The long-term opportunities post a recovery presents itself with value for investors who are willing to take advantage of the market downturn. So, how have we positioned our portfolios in light of this market outlook? Well, we're limiting our exposure to discretionary spending behavior, such as retail stocks. And we're also maintaining a healthy allocation to defensive healthcare with the potential upside around coronavirus vaccines and therapies. In respect to our global asset allocation, we're reducing exposure to the US and replacing that exposure with Australian shares, taking advantage of attractive long-term opportunities whilst limiting downside risks in our portfolio. We see some very attractive valuations by adding to some quality names that have been oversold, including Wesfarmers, Rio Tinto, and National Australia Bank. We've also built some new positions in quality names which have been sold off: Ramsay Healthcare, Cochlear, Sydney Airport. To give you an example of the first, Ramsay Healthcare is Australia's largest private hospital operator in Australia, and it caters for a range of healthcare needs from primary care to high complex surgeries, as well as mental health and rehabilitation. What we've seen here is with Ramsay's tremendous earnings strength, which historically has delivered very consistent profit growth. And we expect this trend to follow even after coronavirus. They have very strong balance sheet and a well-experienced management team. All in all, the position is very defensive, and it's a business that has been impacted by the decision to postpone elective surgeries during the outbreak. However, we do see this as transitionary, and we don't think that the long-term demand for hospital procedures will be impacted, with the government taking action to temporarily fund the cost base of the private hospital sector. Share price volatility has essentially provided us with an opportunity to build positions at an attractive long-term entry price with the fund managers that are getting into these positions. Another long-term opportunity we see is Sydney Airport. At the moment, it's a monopoly asset that processes the largest number of passengers of any airport in Australia. And in summary, short-term disruption caused by COVID-19 provides an excellent opportunity to purchase a quality defensive asset, again, at a very attractive valuation. In respect to our fixed interest exposure in credit, we are looking to reduce our exposure there and build positions in equities and defensive equities as that, such as consumer staples, industrials, resources, technology, and we've already mentioned healthcare, as we look to invest for the long term. In terms of active management, we are looking to reduce our index positions to help supply better quality company selection, as well as introducing funds that can place a short positions on cyclical stocks that are facing some challenges. And finally, as we approach the close of this financial year, we'll be reaching out to our clients to discuss the changes to their portfolios and the strategy moving forward as part of our regular reviews. If you would like to discuss this sooner, or if you're a new client looking to take advantage of the market, please reach out to our team and we can review your position and give you some advice accordingly. And finally, we're kicking off our INFUSION360 webinar series with this market update. But coming up next is a really important update on the Australian stimulus package by our senior business advisor, Anthony Hanna. So please register your interest and we look forward to seeing you at our next event. Thank you.